What's up everyone, welcome back to a new video on the Alien Algo channel. Today we'll be going over the markets again per usual, but today I will be uploading it a bit earlier because I have some things to do during that New York Open, so I won't be able to record the video right after. So with that having said, we'll first start at the stock market, which is quite clearly trending up. And the moment I started recording yesterday's video, I stated that this does look like it will be that low. Right around here. I was seeing this on a 30-minute chart for the 30-minute chart. But I stated in 2 videos ago that we could take out these lows, but when I started recording yesterday's video, it was looking quite bullish right here, with all the major index funds and BTC and ETH all making crucial pivots. So I stated this could be that low, but just make sure that it needs to hold this level right here, because it already took out this wick, right? So this wick, and what do you want to see with a sweep? You want to see it take it out, reclaim it, hold above, and then go up. And I stated if we hold this will most likely be that low. And thus far, it has been playing out quite nicely. What can we expect on that open? It would look kind of logical to take out one of these two wicks. But we also have a crucial pivot at the upper part of the chart right now, where, in my opinion, these will be those levels to watch, where we either trade first into the lows and then start going back up, or we start taking out this part first, where we roll over a bit and then go back up. What's also a possibility that we just break and hold. So these 2 points, especially this one and this one, in my opinion, will be crucial. So watch the reactions at these 2 levels. For the NDQ, it's quite a similar, it really looks quite similar. I think this will be that crucial level. It has proven to be resistance here, small support here, and later we trade back into this. So currently we are ranging in between these 2 levels. So if we start getting acceptance back above this should rally up. If we start finding acceptance back below, we could most likely take out these wicks. When we look at the Dow Jones, this just looks like the strongest out of all of them, where it's just trading sideways. So this, it just looks like a typical compression like we had here. We currently just are compressing yet again. So I think they should continue up. What are those 2 inflection points? Of course, you look at that high and you look at that low of the compression, right? So these 2 points will be crucial either to flip or to get a sweep, acceptance back below, and start going down again. So that will be it for the index funds. When we go into crypto, we will first start with BTC. And the thing I keep saying to you guys is that range that I've drawn here with those purple lines. What did I state in that video? When I pointed out this range, I told you guys that there are a couple ways that a range can be played, right? Where we break up, retest, go really further, or we fake it, meaning we make a sweep on that upside, we find acceptance back below, and we first take out that low. And I've drawn 2 examples here, where I stated we want to see something like this, right? Where you take the upside, you deviate back in, and we get a sweep, reclaim, hold, right? We don't want to see some shit like this, where we sweep it and we just get a bearish retest instead, because then we will most likely roll over. So what did we really get? I want you guys to study this image. This is why I've drawn it right on top, so you guys can keep seeing this. And this is never in the way, it's just a quick zoom in of my screen. Right? So now look at this. These 2 points. What did we see? We faked out at the upside. That fake out. It went a little bit lower than I expected, but initially we wanted to see this getting reclaimed, right? Later, I ended it to switch it back to this point because we deviated even lower than the original range low. So here we went below, started going back up. So I really want you guys to study these types of formations, because when you have a compression, you have a couple options, which is either that breakout or that fake out, right? Where in the case of a fake out, you usually have a high like this and you find acceptance back below it, like this. And then you continue further down, where you either will find buying pressure at that 0.5 level. If there is no buying pressure coming in at that 0.5 level, it simply means buyers are waiting for those range lows. So those are your two options, where you, in the case of this scenario happening, where you retrace back into that range, you either want a reaction at that 0.5 level. If it does not give a reaction at that 0.5 level, it will most likely retrace back towards those range lows. If the image is upside down, it's of course a bearish range instead of a bullish range. Quite logical, right? So really wanted to go over this once more, but with that having explained, let's get into that BTC chart. When we look at the daily, it looks quite well. All we need to do is flip this level, and I don't see what is holding us back to trade like into those 113, 115 area. Because this is looking like that crucial resistance, which it has proven to be here. And what do I mean with finding acceptance back below? Here you have your previous level, you get below it, you find acceptance back below. Because if we were bullish right around here, if like the major bias was bullish, and if the buyers really were stronger here, what would we have seen instead? We would have seen some shit like this. But instead of this reaction, my excuse, instead of this reaction, we would have gotten something like this, right? This was what would happen if bulls were in control right there. But bulls weren't, and we found acceptance back below that crucial level. So we really need to flip this. You already see how often it has been proven that this point is crucial, right? You see it already 3 times only on this chart. And currently we have tapped back into it again. So we really need to flip this, and otherwise we will most likely be making some new higher lows. Where can these higher lows end? I've pointed out one little thing on Twitter, where we currently have a bit of a range, where this to this is your new point. So when we look at this, and I will clean up all of this right there, because this is not relevant anymore. Right, this one also won't be, yeah, I'll keep this here. But the thing we currently have been making is we are creating some sort of range right here, which we have respected this point, we have respected this point. So I do think we can conclude this to be that range. So what do we know about ranges, guys? That you want to break them towards one side, or you want to break and reclaim, right? So what don't we want to see? Let's first start at the scenario we don't want to see. If you're a bull, of course, if you're a bear, this is exactly what you want to see. Currently at this high. So let's draw a box right here. And one thing before I go deeper into this, why is this range here? Look at the daily. This is exactly your previous day candle. Yes? So I've explained this logic in 1 or 2 videos, where either full day candles or full week or full month candles are being respected in the next session. So if you're looking at 1 day of this candle currently, so this candle I mean, these levels should be respected on the next day. And you already see that we've had a bounce late in the night on top of this level, which pretty much has been given to us by the previous day price action. And did I point out any levels? Did I draw any lines? No, all I did is I took my Fibonacci tool with that 1 0.25, 0.5, 0.75, and 0 right here. And this is the levels that it has given me. And you already see how we made a pullback into this, and here we started to see some buying pressure. So I'm not the only one looking at these levels. But with that explained, how did I find this range? How did I find these levels? That's the exact way that I did it. So what don't we want to see if we're on a bullish bias? We don't want to see some shit like this, right? Where we trade back into this and then we just start rolling over a bit. It can also be a little bit slower where we do some shit like this instead. So this is what we don't want to see. What do we want to see? Then we hold this and we start trading back up, right? Then we just hold this line so we can extend even further to take out this wick, and here will be liquidity to take us all the way towards here. But what don't we want to see is that us finding acceptance back below this, right? Where we start trading below this box, because then we will most likely be trading down for the day. So that is a thing I wanted to point out, but I wanted to explain it a bit deeper so you guys have an understanding where these levels have came from. And this is just your previous high, that if you identify this to be your range, you don't want acceptance below those range highs, right? Because then you will most likely reverse all the way towards at least the 0.5 level, like explained in a range. When it deviates back into it, you want to see buying pressure on 0.5 levels, because if it doesn't, it will most likely continue to rally all the way down towards a 0.25 level, like right around here. Or even worse, it will trade all the way towards the range lows, right? So these are a couple things to watch out for. This box will be crucial in my opinion for now. So let's look at it from a volume perspective, where I stated that if we break this level, we should immediately trade into this, which we quite literally did. I said this is that low volume node, so if you start to break out of this level, you will most likely instantly trade into this. Right, and we did. So you see how it flew right past. And yet again, we have low volume here. Where did it fly past again? You already see it, that high volume node. So what did we really get? Traded into that high volume node, retraced a little, went fully up, got a little bit of a pause here, had even more gas to go all the way towards that high volume node again. Look what we skipped. We skipped that low volume node again. Next, we went back down into that high volume node. And now we got sent straight through that high volume node and started rejecting on a low volume node. So this is why I tell you guys study volume, because it pretty much tells you whether a price will continue or won't. And if volume starts to decrease, it's quite logical that if we are approaching a resistance, what do you need? You need to have buyers to kill that resistance. So if your volume is increasing right around here, let me perfect it a little bit. If your volume is increasing right from this point to this point, but it starts decreasing from here to here, it will most likely fail. But if volume starts to continue, like you are trading in high volume constantly, you see big candles and you see big volume histogram bars, you will most likely know that price will continue until volume starts to die down, right? So if volume starts to do some shit like this, where we start to roll over. So that's a key thing to point out. So when we look at this from a volume perspective, what is the next level to be trading into? I think it should be quite logical right now. We yet again have it right around here. And now let's look to the left. And you guys should already see it that this has not been perfect and I need to take this node with it. So I will put it a little bit lower that we also have this node. Yes, perfect. And where does this level come from again, guys? You already see it. So purely based on volume, I could tell you this is a level without even looking at a logical chart. So the current scenario we seem to be getting though is that acceptance above this right now. So my bet would still be to look for further upside before we look for further downside, where I think we will continue to extend a little bit higher. And how much higher? Let me make it easy for you guys. I will draw a second range on top of this range. What do we get? We get logical levels. Right, so your first deviation in the case of a breakout would be 110. Otherwise, 112, 2, 112, 1.5, some shit like that. And then we get into this. But how do we play it? Of course, we take some profits. We watch to see if it rejects or if it breaks. If it breaks, we will most likely get back in. If it does not break, we have the opportunity to play that back to the downside. So we will play this level by level, but just know these can be logical extension levels right here. And if we do some full massive shit where price just really starts to continue and we do some shit like this will be a logical full extension level. So what we want, acceptance above this, all good, we will most likely be trading up. If we find acceptance back below, we'll most likely be trading down. And if we start trading up, first look at this level. If this level gets cleared, look at these levels, right? So now that we have had BTC with some further explanation about those levels, let's get into ETH. Yeah, what did we hold? The range low again. Perfect. You guys see how ranges are getting respected. People say ranges are hard to trade. No, you just don't understand the range properly. Where you have the opportunity to really play ranges quite easily. They are way easier than trending markets. You just have to be a little bit faster with your rotations. But there are more opportunities than just inside of this move towards the upside. It's just a couple candles going straight up. So pretty much you had to be positioned right around here or here. And while this is happening, you pretty much have zero opportunities to enter. But now let's look at this. What can we do here? We can buy that low, sell that high, buy the low again, sell that high again, buy the low again. And we can even flip them in between. So we buy, we sell, we short, we exit again, we buy again. You already see the big difference. And this is the same amount of price action, right? So trending markets are harder to trade because you really need to be positioned at the start of that trend, or you need to take tiny scalps in between to use that trend. But in a ranging market, you usually have the opportunity to just long the lows and short the highs. And you can flip your positions in between either if you play it really well, right? So this is why I say study ranges, because it's really easy to trade them when you start to understand them. Okay, so we are currently holding that range low. We even swept these lower time frame wicks, which is quite bullish. And we flipped that 0 to 5 level, which I stated I really want to see that 0 to 5 level getting flipped, because otherwise we will most likely be trading down. But what do we want to see break? This. What do we want to see hold? This. These range lows. And we already see which one has been breaking out. It has went towards the upside. We currently are trading at that 0.5 level, so what do we want to see? It hold above that 0.5 level to see continuation. If we start finding acceptance back below that 0.5 level, it is a high chance of us retesting this level before we continue up. So keep that in mind, watch the 0.5 level. If you want to know the exact price, it's right there. So with that said, let's get into that volume chart for ETH, where we had a couple scenarios, which, yeah, quite logically should see by now that both of these scenarios have played out, just we had one happen first and later the next one happened, where we reclaimed this POC, started trading up, was a bit more explosive than I stated. I already said that in a previous video when this move happened. this call has been from a while back, but this is why I tell you, map out both scenarios because you don't know which one will play out first. Sometimes only one plays out, and then it just, because that's also a thing that could have happened there, that instead of us going back to map out this scenario yet again, because I've drawn these at the same time, right? Because I don't know if this will hold, price will tell. But here we see a big wick, a higher low. So now I know this scenario will most likely play out. But if instead we did some shit like this, and we start to roll over here, now I will be expecting this scenario to play out. So this is a thing you guys should be watching, yes? So you always map out both sides so you are easily able to adapt to the scenario because you've already been prepared for both sides. Because if I only map out the upside and the downside comes, now I need to react. Now I haven't planned it, right? There's a big difference inside of that. Because it could have also went that instead of going down, that we just started continuing up here. Well, then this scenario would have been fully violated, but it hasn't. Both of them played out in this case. Right, so here, what did we have? Yet again, that value area low. And logically, with a range, you need to extend it until that range has been disproven. So, from here to here, well, to here actually. And you see how that value area low, we deviate from it, we get back up, we reclaim that POC, and we push further. This is just simple volume analysis, guys. I'm really not making it overcomplicated here. Right, and here we have that macro range. You already see how this has played out. We reclaim that value area low, and we currently are trading above that POC again, which is pretty bullish. So it currently is looking really good for the general markets and for the crypto markets, if I'm going to be honest. So that last little point is, of course, that ETH BTC chart. Because what did I state? We were getting some compression with a little fake out here. But when you get a fake out of a pattern, it really does not mean that pattern is violated. Because what do we see? We get buying pressure, we get that logical reversal around the lows anyways. So it's not been because it has closed above here and we got back into that zone to make a fake breakout, rejecting initially from that 0 to 5 level, that this has been violated. No, this compression is still a compression. So what did we see? That fake out, we got that hold right here, and we got sent up. And can we already see what some alts have been doing? Yeah, it should be quite clear that alts and ETH have been stronger than BTC. And here as well, what do we see? This is the exact thing that we want to be seeing for us to be bullish on alts. We want this to continue to rally. So what does it need to hold logically? That 0 to 5 level. What does it need to break? This right here with that 0.5 level right above it. That 0.5 level will be more crucial for me than the blue box. So keep that in mind, watch that 0.5 level and that 0 to 5 level for ETH BTC. And for the BTCD, as stated, we don't want to see acceptance above this. And when we got back into here, we want to find acceptance below this, because this is the exact same thing as I've pointed out with BTC for today, where you have those two pivots and you can conclude them to be a range. So what do you want with a range if you're bearish on that certain asset, which I am on BTCD? You want to see it sweep, acceptance below it, retest. This is what you want to see. What don't you want to see is that it starts doing something like this. Because if BTCD starts doing something like this, you better know your alts will be slaughtered in this move. But when we start doing something like this, the alts will flourish. The alts will go quite mad. As we've already seen from this very tiny move, if BTC started to move. Pretty much all major alts have pushed and pumped like 10 to 20% yesterday. From what? This very tiny move where BTCD has been underperforming and ETH BTC has been outperforming. A very tiny move, only a 1-day movement, but this really gave 15 to 20% pumps on certain altcoins. So keep this in mind that currently alts are looking to be that better pick. So keep your eyes on that BTC, on those two critical pivots, because we want to find acceptance above this, and otherwise we really need ETH to be carrying BTC along. Because that's a thing that is common in crypto. We have money rotations, right? Money rotations. So with money rotations, it means BTC will go into some sort of range and ETH will start to take over and alts will move along with it. While the BTC is ranging / going down a little bit, everyone is bearish, but yet altcoins start to do all crazy sort of things. That is that money rotation I'm talking about. So watch the crucial pivots, play that New York Open. What do you usually get on the New York Open? You usually have point A. Let me even draw it a little bit better. You usually have point A, you have point B. Let's say that New York Open is right around here. You usually have a grind up towards that New York Open, have a little fake move, and you usually have some short like this, where you take out both sides. So it's usually a quick ramp up towards one side to make a fake towards the other side. Can also be in the bearish variant, where we have it towards the downside first and it pumps later towards the upside. Right? It's usually a fake to one side to go to the other side. Right? So shit like this. Watch these types of structures around the New York Open, daily close, or that London Open, and it should work out quite well. Right, again, at that London Open, you see we grind down a little bit into that session. You have that little move towards the downside, and we reverse towards the upside. Watch these types of structures, guys. So I see this video has been taking way too long, but I've added a lot more education in this than normal, so I hope you guys liked it. It may be a bit of a longer one to watch, but I hope you guys learned it and it was worth the time. But with that having said, guys, have a nice day, and like usual, keep trading. Goodbye.